Welcome to Alpha Insights. I'm Niva. Today, we're unpacking the ripple effects of the Justice Department's rescheduling action this spring and what it means for cannabis taxes. I've got Ryan with me, an investment advisor who follows policy and tax outcomes closely. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks for having me, Neva. Excited to dig into this. There's a lot people are trying to make sense of right now.
Okay, let's start simple. What exactly changed this spring, and what didn't?
Right, so the core change was that certain state-licensed medical marijuana programs were moved into Schedule 3 under federal law. That means those qualifying medical operators can now treat federal tax rules like other Schedule 3 businesses. They can deduct ordinary business expenses going forward. Payroll, rent, utilities, marketing, those are deductible prospectively.
Prospectively, meaning for the tax year after the order took effect?
Exactly. The order gives clear, forward-looking relief for qualifying medical operations. What it did not do is resolve prior tax years or guarantee refunds for taxes already paid. That retroactive question is left to Treasury and the IRS, not the rescheduling order itself.
So people shouldn't assume refunds are automatic.
Yeah, that's a good point. The order invited Treasury to consider retrospective relief, but until Treasury or the IRS issues guidance, any talk of refunds is speculative.
Got it. Now, there's been a separate administrative hearing. Walk me through why that matters.
The administrative law judge hearing, which ran from late June into mid-July, wasn't about the medical rescheduling. It was about whether the change should extend to adult-use recreational cannabis. If adult use gets moved to Schedule 3 too, that would eliminate the current tax split where medical operations can deduct expenses and recreational operations cannot. That would be a big structural shift.
And how likely is that to happen through the ALJ process?
Industry consensus puts the odds in the low to mid-range, roughly 25 to 40%. There are political and regulatory headwinds, plus the ALJ's findings then face potential appeals, so timing could stretch into next year or beyond.
So we have prospective relief for medical, uncertain retroactive relief, and a moderate chance for adult use down the line. What about the technical refund rules, statutes of limitation and such?
Good question. Under the tax code, taxpayers generally have 3 years from filing a return or 2 years from payment of tax, whichever is later, to file refund claims. Practically, that means most operators still have open windows for 2023 and later years. That's why many companies are filing protective refund claims now. It preserves their ability to seek refunds if Treasury allows retroactive relief.
Companies have reacted differently to all this. Give us a sense of the range of approaches.
Absolutely. Some operators were conservative on federal tax positions, others aggressive. For example, one large operator shifted to an uncertain tax position a couple of years ago, effectively questioning whether Section 280E applied to them. Another company filed amended returns seeking about $143 million in refunds and reported getting significant cash back while also carrying large, uncertain tax liabilities. But the rescheduling alone doesn't validate any retrospective claims. Treasury or courts still need to weigh in.
That paints a messy picture for analysts and investors.
Honestly, I was a bit surprised by this one. The sector no longer sorts cleanly into compliant versus aggressive camps. Most big operators now carry at least some uncertain tax positions, so Treasury's choice on retroactivity becomes the single biggest variable for future financial outcomes.
Let's put some probabilities on the table for listeners who want a framework. How should they think about the chances for each outcome?
Sure, the probability that qualifying medical operators will be able to deduct ordinary business expenses for the full tax year going forward is high, roughly 75 to 80%. Retroactive relief for prior years is less certain, maybe 40 to 50%. And if it happens, expect a multi-year recovery process, likely 3 to 5 years through amended returns and appeals. Adult use rescheduling via the ALJ path sits around 25 to 40%. Expense allocation guidance for operators who run both medical and recreational businesses is likely to arrive later this year, with something like a 60 to 70% chance of clear medical-only guidance by year-end.
And what should investors watch for as the next catalysts?
Two things: the ALJ's written findings and the first formal Treasury signal on retroactive relief. Those are the big binary events that will reshape cash flow expectations and potential refund timing.
Quick reactions. 2 short ones. Ryan?
Protective refund claims make a lot of sense right now.
And me?
Be cautious about treating recovery estimates as facts.
Perfect. Before we wrap, can you give our listeners 2 or 3 takeaways to remember?
Sure. 1. The confirmed change is forward-looking. Qualifying medical operations should be able to deduct ordinary business expenses going forward. 2. Retroactive refunds are plausible but far from guaranteed, and any recovery will likely be a multi-year process. 3. Adult use rescheduling is possible, but not the most likely outcome, and it could stretch into next year or later.
Great summary. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for listening to Alpha Insights. I'm Niva.